For those of you that don't know me, I'm Sarah Fitzmaurice, CEO and co-founder of Executives in Africa, Executive Search for the Continent. Anyone shaking too many hands and need a free hand sanitizer? We've got some nifty little squirters here that you can sanitize with. So do pop by the stand and grab one of those. So fantastic. So we've heard about we've heard a little bit about the logistics, transportation side, a little bit about the real estate and investment side, and this next panel on building is all about unlocking Africa's infrastructure investments. So moderating this panel is Martin Pruis. Martin is from the Netherlands originally, holds an MSc in Business Administration. 17 years of infrastructure finance experience gained in various roles across advisory, project, corporate and structured finance roles, both in the emerging and developing markets. So he's currently director of 91, which was formerly Investec Asset Management. Prior to that, he worked at FMO's Africa Infrastructure Department and also to Bowden Consultants and Engineers. So he's worked with the Emerging Africa Infrastructure Fund for the last 12 years, and I'm looking forward to him hearing and moderating this panel on unlocking Africa's infrastructure investments. Please welcome Martin Pruis. Over to you, Martin. Thank you.
All right. Good afternoon, everyone. Indeed, so my name is Martijn Pruis, and I'm from the Netherlands. I live now 13 years in the UK. So I will have a bit of a Dutch accent to this. I always ask my friends whether my English has improved over the last 13 years. And my friends told me this weekend during dinner that my accent is still very much there, so I apologize for that. Hopefully you will all understand. So I'm very happy to moderate this panel today. It's about unlocking Africa's infrastructure investments. And I go to these conferences for quite a long time, and I always hear about problems that we need to resolve and how can we scale up. Well, fortunately on this panel we have a couple doers here who are actually live experience on the ground and who get projects off the ground. So I'm very pleased to introduce you Gail Glintworth, who represents Savo Development Partners, and you will explain a little bit about what you do in the industrial and economic zones. We have Miguel Shah, who will give his perspective from the insurance side on Africa, and we have Annie Valepneni, right? I said it right, of Senergy, who works in the wash sector and especially in waste management. Could you first introduce yourself very quickly?
Great, Martin, thank you. So I'm not Robbie Marwick, I'm Gail Glintworth. Robbie's the CEO of Savo Project Developers. He's unfortunately not able to make it because his mother's just passed away, so my sympathies are with him. I chair and I'm a co-founder of Savo Project Developers. We are looking at sustainable projects from the ground up in Africa that cover basically a diversified asset class that ranges from special economic zones and industrial zones, particularly ones that are privately either owned or run. Secondly, agroforestry. And thirdly, anything around energy, renewable energy or circular economy. We work currently, we've only been going for a year. We work currently in Nigeria and Kenya. Nigeria, we have one very large project, which many of you who know Nigeria would know Ladol, where we're helping Ladol to transfer themselves from being oil and gas servicing operation to a diversified asset. And what do? We go and we basically hold the hand of the project sponsor. So help with basically what does it mean to transfer? How do you bring in the right kinds of engineers to do whatever's needed? And then we help with fundraising and tenant acquisition in that particular one. And in Kenya, we're working on two similar projects. And then in Cameroon, Madagascar, Gabon, Ethiopia, Uganda, we're working on behalf of the Partnership for Forests to look at smaller scale operations that are scaling up to basically ensure that trees don't get chopped down. Thank you.
Okay. Annie?
Sure. Thank you, Martin. So at Senergy, we work on aggregating organic waste from urban areas and transforming them into agricultural inputs, mainly protein for animal feeds and organic fertilizer for farmers and biomass energy for industries. So we work on how do we partner with municipalities and agribusinesses to create a circular economy model of taking urban organic waste and moving it back into the agricultural supply chains in a safe and cost-effective manner.
Great, thanks. So at Africa Specialty Risks, we're actually an insurer and a reinsurer, which looks to de-risk investment into and across Africa, and that's our prime goal here. We write on our own paper, so we have a reinsurer in Mauritius and a reinsurer in Bermuda, but we also write on the paper of Peak Re, GIC of India, and Atrium Syndicates who are at Lloyd's. We provide all the covers you need for infrastructure investment. That includes the political risk covers, the political violence covers, terrorism covers, the construction, the D&O, the liability covers that you need, as well as a whole range of parametric products which go across every line of business that we have. So I guess we're the only ones that will offer a parametric in every line of business. It's just another way of doing insurance. And so we've seen a lot of the sort of difficulties of unlocking the investment into the infrastructure of Africa, which we all know is greatly needed.
Okay, well, very much. If we could zoom a little bit into that last bit, we had our conversation before this panel, and I think you gave some very interesting perspectives on how you can grow your business, right? You said because there's so much more that you can do, and that means also that the market can grow a lot faster. So from an insurance perspective, what could be done in the market to grow your business as well as to get more infrastructure built on the continent?
Great, that's brilliant, because when we see an insurance policy, when somebody says, oh, we're going to build a railway in Ghana, which is very topical, I know, if it's been structured incorrectly, you won't get the backing of the insurance market. And for these sorts of projects, you need backing from the international insurance markets. So there has to be structured in a way that allows international insurers to put down capacity when they need to put down capacity. So we've always been saying that if we can be involved earlier on in the project, we can help structure the project and structure the insurances that are required to de-risk it in a manner that allows other people to follow us and the people that we work with, such as GIC, Atrium, Peak Re, and ourselves, to add extra capacity to fulfill the risk mitigation needs that we need to provide to get these infrastructure projects off the ground. So the earlier we can be involved, the better it is in terms of structuring, and the more successful we think it will be in getting the financing, because it's all driven by the financing and the debt that's needed to fund all of this.
And what in terms of developing of market standards? Is there a market standard out there for insurance products? Is the documentation well prepared? Or is there room for improvement?
There's always room for improvement. We can see the documentation we see in the London market, which is really being developed and driven for developed markets. What we need is documentation that's appropriate for our markets in Africa, which face different challenges to building a road. Building a road in Ethiopia is different to building a road in the UK and has different challenges attached to it. So we need documentation which is appropriate. We are working with that, but we need something that bridges the gap between what's needed locally and what international insurers and reinsurers are used to seeing. And we're happy to fill that gap and meld the two to get something appropriate in place.
Okay. And some of our projects, actually more recently, that we as the Emerging Africa Infrastructure Fund finance, we see that the markets have hardened.
Yes.
And that it's tougher to get, for instance, political risk insurance or terrorism or violence risk insurance. Is there enough capacity to scale up in Africa?
So that capacity is a huge issue. We launched and we started underwriting risk in February this year. Our run rate is very high. We're seeing a lot of risks. We have our capacity, which we're happy to deploy. And what we've seen is that there has been a pullback of capacity from Africa, from the large insurers and reinsurers. And it's really simple. It's a global market we operate in. The corporate and specialty insurance market and reinsurance market is global. So we've seen a lot of big claims coming out of the Western markets, and rates in the West have gone through the roof, and that's where all the capacity has gone back to. It's pulled back to the US Europe, and the UK and other developed markets in Asia as well. And therefore, there's a dearth of capacity for Africa. We're filling some of the gap, but the more capacity we can have, the better it is.
So what needs to be done to reverse that trend?
Well, I think if we can structure things more attractively, which makes it easier for people who would follow us into a risk, makes it easier for them to say yes. And we have the credibility for that. But there's others that also have the credibility. So we just need to work together to make something more insurable.
Okay. All right. Thank you very much. Gail, as a party that supports developers for industrial parks and economic zones, so you're playing a catalytic role in that. What do you see as the biggest gaps in the market, and what needs to be done to accelerate the rollout of the projects that you're working on?
Okay, great, thanks. So I guess the first gap is the paucity of available capital for individual entrepreneurs. So if you think about the way the economy works across Africa, really, right? If we're honest, you've got kind of the World Bank, the big development finance institutions, and big private capital lenders on one side, and governments on the other side, with a few multinational corporations. And we're all playing together, right? So World Bank's playing with governments, funding big projects, da-di-da-di-da. That's wonderful. The problem, as all of us know, is that that doesn't necessarily mean that the economy starts growing from the bottom up. And while there are successful entrepreneurs in many of our markets, we can generally count them on one hand, right? I can mention all the names and you'll nod your head. That can't be all there is, right? Any amazing growing economy has lots of entrepreneurs that are successful. At the moment, the money doesn't flow to them. Why doesn't it flow to them? Well, first of all, risk appetite, right? So risk appetite for everyone is an issue. The DFIs, even in the private funding that's available, God bless our DFIs, and I love you all. You're very risk averse, right? Private capital is obviously risk averse. And then where we look for blended finance, it can work very well, as you know, Martijn, but it takes a long time. So what happens when it takes a long time? For these individual entrepreneurs who've got really great ideas, got land, got whatever it is, how do they go from, I've got a piece of land and I want to do something great that's going to create jobs, it's going to be environmentally sound, how do they go from that to having the funding and having something that's ready for, someone that's got a decent risk appetite to take? Well, they don't have the funding to do that. So, what you need is some kind of seed to enable them, some project development seed. At the moment, in some ways, I'm not me personally, but the little organization that I'm working with supplies that through, some support. So we are doing that to help you get along the way. That's the first step. The second step is the capacity. You've got amazing people, amazing entrepreneurs, right? What they don't have is big armies of people that are used to preparing the kind of documents that the capital providers need or that the insurance people need. So again, you need some kind of funding to support them with that. That's the second thing. And then the third thing, fintech, of course, has been amazing, right? Everybody wants to put money into fintech because it's supposedly scalable, right? I mean, I don't know how many of these app things are actually going to solve all of our problems in Africa, but it ain't going to be, it's not the ones I know that are going to build the road. And so, I think the risk appetite that we needs to extend beyond fintech. It needs to be beyond the tech thing, because Africa is not going to leapfrog beyond growing food and having roads and logistics to just be a digital economy that feeds everyone. I don't know how that's going to happen. So risk capital, early project seeding capital, and risk appetite to invest in things other than basically no infrastructure or heavy asset.
Okay. Well, thank you. So you're sending a clear message to the DFIs here, right? So what do they need to change, in your opinion, to get to that local entrepreneur? Perhaps in their operating model or in their risk appetite statements? And what other sources of capital would you look at other than the DFI space?
Okay, great. So, I mean, there are facility development funds that the DFIs are putting in place, right? Or some DFIs. From what I see, a lot of them are around feasibility studies, right? If I see another feasibility study for, I'm not going to mention names, but I've seen projects in Kenya where there's like 10 feasibility studies that McKinsey or one of our beautiful consulting companies have done that cost $2 million a pop to do this amazing consulting feasibility study, and then another one, and nothing ever happens, right? And those are all funded by DFIs. It can't be right, okay? So that's the first thing. The second is, so you need some kind of facility around project. The second is, where we do have some kind of project development funding, a lot of it is around technical assistance that I'm going to supply to you as a super big. Again, that doesn't necessarily work, right? You need this person that can, quite frankly, sit down and say, you need to go to the water aid thing and get your certificate. This is the way you do it. It isn't around some grand, theoretical construct of how you do things. That's the second thing. And then the third thing I'd say is work with people early on. That's right. I mean, I've tried with, and I will, my background, by the way, is not in this, right? I ran Unilever's businesses forever, and then I was on the board at Old Mutual, I'm on board of Tiger Brand. So I kind of bring business knowledge. I've gone to so many of our funders and said, let me work with you to try and figure out how we get this project fundable. There's not really a desire to collaborate that way, right? I don't even need to be paid. It's not really a desire to collaborate. What we want is we all want to go into our own little box, do our sums, point out where there are problems, ask for documents, and then see if we're going to fund it. It's not the way we're going to get scale. It's not the way we're going to get local entrepreneurs to lead things.
Okay. All right. Well, thank you very much. Moving over to you, Annie. In your sector, right? Historically, a lot of government involvement in water and waste management. You're a private company, right? And you want to scale up. So what are you facing? What is successful in your business, and what challenge do you face, and how would you like those to be tackled?
Yeah, don't want to repeat what Gail has already said, because that how do you directly fund entrepreneurs is a big question in a space that's traditionally used to funding government, financing government. So when we first started 10 years ago starting with the sanitation space and looked at, well, why, if there is all this cash available from DFIs and World Bank and so on, why is sanitation still a problem, especially in urban slums? And the response from the government was, well, it's too expensive. I can't take a loan for $250 million or $500 million to build a sewage network and expect it to repay the loan. So we worked on developing a model that is a tenth of the cost of sewage and requires no upfront investment from the government. But now when we go for financing, it becomes too small of an investment, because DFIs want to put 20, 30, 40, 50 million to play. And we're like, well, actually, I don't need that much cash. I need something smaller. Then you have to put a whole portfolio of projects together for that minimum size to make sense. As maybe there's, the funding space hasn't evolved with the solution space. The solution space is far ahead of what the funding currently. I'm not generalizing. There are unique pockets of funding that obviously we've been able to access so far, but in the overall, I'd say 80% of the market is built to. If you're looking on wastewater, it's okay. Let's finance the government to build a sewage system and a treatment plant, or if it's waste management, let's finance the government to build a landfill. Or something like that. And as I think, Gail, you pointed out, is the reality is, in our perspective, government should be in a regulatory role, not in an operational role. And the moment you get them involved in the financing side of it, it either slows down the process or subjects us as entrepreneurs to significant, is leverage the right word?
Graft payments.
Right. That we don't need to be subject to if that financing could come through different mechanisms to a more efficient private sector investment. So I'd say that's the main thing, is how do we be open? So if you go to the World Bank, is never going to finance a more innovative solution like ours, because it's not in the menu of options that they're used to. So how do we make it allow for more new solutions to come into play, and how do we remove government from having to be in the loop beyond the regulatory side of things, from having to be involved in this? Because the moment you ask them to come to the table, unless you have the right sort of leverage with them, it's hard to not subject yourself to.
Okay, what challenge do you then face? So you want to see a change in the role of government, to become more of a regulator. So what needs to be done in that field to make that happen? So that and what kind of mentality shift needs to happen within governments in order to enable that?
Yeah, I think it's about building the enabling environment and providing the assistance through private sector to build an enabling environment. So the government recognizes that their best role is in standard setting and regulation and enforcement of that standard setting, rather than saying, well, let me put in place what I need just so I can get the cash in the door. If we remove the fact that right now the way is like, okay, you pass a law, then we will give you money to then build it through bidding, public bidding. But if we change it to say, okay, here's some cash to create the enabling environment, then we will only fund the private sector to come in to play in that space. And the government isn't incentivized to pass what's minimum that they need to bring, to get their cash in the door from the larger DFIs. So,
okay, so one more question. So you have been successful deploying your capital despite all the challenges that you face. So where does your capital come from, and what were the factors of success in your business?
So I'd say we've been using capital that isn't most efficient for this. So for example, the debt. So in Nairobi, we have a factory that takes in 70,000 tons of organic waste a year. That was financed through corporate debt. It is not as cost effective as the cost of capital is not as efficient as project financing, and it creates a lot of overhead as we want to expand, because corporate financing comes with its own covenants that project financing is different from. So we've had to take financing that was not meant for infrastructure projects and put it in infrastructure. The other often challenge we run into is the terms. 5-year tenors aren't appropriate for infrastructure investments, but we've had to sort of squeeze those together to say, okay, let's at least show a proof of concept. Let's get one factory out the door and show people that this is feasible, and then maybe we can catalyze this. So I'd say largely we've been successful by taking capital from other places that is not infrastructure oriented and trying to put it into this.
Sorry, you want to come in?
Yeah, I was just going to say, look, there's two types of infrastructure projects we need to discuss. First, the big government-backed infrastructure projects, which do exist.
Of course.
And we need to work with those and encourage those. But the private sector infrastructure projects may actually work in countries where perhaps the government isn't insurable or isn't backable. And that's where Gail and Annie are talking about. And I think we're as a risk taker and mitigator, we're happy to play in both aspects of that. In certain countries, it's easier for us to insure corporates than it is the government. So it's worthwhile thinking of different ways of driving the investment that's needed to develop the continent. And all avenues should be opened. I come from a business family in Kenya, and I can testify to Gail and agree with Gail with all of this, that it's hard to get financing from the banks and from DFIs for private projects. We fund everything ourselves, in fact.
So what strikes me, there's a lot of talk about your business models and requiring funding from DFIs, but where are the local pools of capital? Where are the local banks? Can you play a role in that regard as well, working with local financial institutions? Gail.
Okay, so in our case with our Nigerian project, right? So we have one pool of funding that actually came in from a blended finance vehicle. The other two pools are local, right? So in fact, that's one of the things we've decided. ARM, for example, is an easier player to work with than someone who might have billions sitting in the US to invest, right? Because they just understand, and they're more aligned, actually, in the incentive. Because all of what I'm talking about is commercially, the rate of returns are superb, right? So commercially, they're very sound. It's the risk appetite that's the issue. And the other, so yes, local pools. The question is, how many local pools are there, right? So, if you look at if we look at our big banks, right? So our ABSAs, our Standard Banks, HSBC, God bless them, they don't want to go to do anything in Nigeria anymore. We've got Econet, we've got EcoBank, we've got, 50 of them sitting in Kenya, right? So we've got the big players. They also want the big projects, right? Scale is what makes banking work. So, you're not necessarily going to want to invest in a small guy's project. Then there's an untapped space, I think, in private capital, as in, private investors. But again, if you go to private equity players, right? Private equity players, again, are quite often interested in the distressed asset, and I want your business. Your family business, I want it, right? Most family owners don't want to do that, right? Secondly, a lot of your large private equity players are looking at creating their own platforms, which is great, but I know Jeff was here earlier. I mean, it's taking these platforms a very long time to deliver returns. And then I just want to mention one other obstacle, but it's not really an obstacle, it's just a mindset, which is in a lot of the catalyzing capital, whether it's DFIs or foundations, whoever, right? I chair the Shell Foundation, so I know about this, right? Everyone's looking for the next sexy thing, right? So you want the next sexy thing. Maybe Sanergy's not sexy this year, but it was 2 years ago. But now we want whatever, agri-tech that's got zoomy things flying around because we can show it at our conference. That's not how you build sustainable either infrastructure solutions, right? It is really, it's 101 of business. Get an entrepreneur, get a need that's not met, enable them to do it, give them the money and stay with them on the course so that they get big enough and then they can replicate it around the world. That's the secret. So, my request would also be if there are any, stop looking for the thing you can put in your corporate brochure. Look for the thing that you can say over the last 10 years, we have built, whatever it is, Mkopa. Thank you, and I'm happy to share it with everyone, as opposed to I want the next, Quidditch player.
Thank you.
Yeah, and just to wrap up, yes, and we will risk mitigate local banks lending and local financial institutions lending to local businesses. And we already provide trade credit insurances for people importing machinery to build their businesses to reduce the imports that they're getting so they can make things locally. So we already do that. And that's a core area that we focus on as well.
Yep.
Before we wrap it up and open up the questions to the room, I think I've heard a lot about financial solutions, DFIs, upping their risk appetite. We're talking a lot about entrepreneurs as well. What do they need to do in order to unlock more projects? And I think Annie, as an entrepreneur,
that's part of the reason I'm here is to understand from the other side of the table. How do I put myself in their shoes and understand what are the perspectives and the criteria that they need to be able to meet. Everyone's. The funders are in the business to deploy money. They're not in the business to sit on the cash. But we need to understand from their perspective, how do we make it? How do we meet them halfway? And I think there's still a long journey to go for me personally to be able to do that. But I think that's part of it is, so I think one of the common things we get, for example, is. How do we know that that there's the certainty of feedstock, the waste coming into the factory? So while the municipal sources aren't the biggest source for us, we now know the value of actually, at least getting an MOU in place or getting some engagement in place with the government, even whether we see them in the long term playing a big role or not, because that provides some level of comfort, whether we, from our perspective, it actually provides a level of comfort or not. From the investor's perspective, it does provide some sense of, okay, this is acceptable and this is some long-term tenor to it. So I think there is still a lot of learning from both sides to happen, and that's why I'm here.
Are there any questions from people in the room for the panelists? Yeah. There's a microphone coming your way.
Yeah, thank you. My name is Alex Oko. I work for the Bureau of Public Enterprises in Nigeria. African governments are increasingly challenged providing infrastructure from traditional sources of funding, from budgetary procurement, even debt. And given the huge, disparity in terms of infrastructure stock to GDP for many African countries, there's a big area of play for private capital, in that space. Now, from a risk management perspective, Miker, what are the challenges and what should governments be looking at, in being able to incentivize private capital into infrastructure development and provision in Africa? Thank you.
Yeah, thanks for the question. Look, we assess all the risks when we see them. If we're able to work with you, we can say, look, if this is in place, this is in place, this is in place, and if we do it this way, so there's a bit of risk sharing between us and the individual company and the local insurer who is on the ground to help in case there's a claim, then this will be much more insurable. And once we can provide a layer of cover, then it's more easy to get the rest of it. Now, if it's a private project, then you only need a few of us together. If it's a very large government-backed project, then you need more people to join in. And that's also possible. But the one thing to bear in mind is there is only a certain amount of capacity in terms of the insurance capacity available. So everyone's competing for it. So the best projects will get that capacity. All we're saying is if we can improve more projects in Africa, Africa will get more of that capacity.
Any of the others?
Yeah. So I was going to, from my experience now of sitting on the project developer side rather than big corporate, right? Obviously, political risk is a really big issue, and that's so difficult to manage, right? Because we know our countries, have difficulties in terms of certainty. Secondly, I think security of contracts are really important because sometimes it is difficult to say, okay, I've got a 20-year concession with a secure contract and no one's going to be able to disrupt that. Yeah. Okay, I'd say that's the second thing. The third, obviously, always is going to be around land rights, right? So how secure are our land rights? And then I think a real risk that everyone kind of foresees around governance is, can the law of the land actually be implemented, managed, governed, or not, right? So if you're looking at, local funding, I think also has that concern. That's why there's so much flight of capital elsewhere, right? And the diaspora sends it back to us. That's nice, but the reason they put it there is because they're more secure. But the second is anyone from outside coming in. I do a lot of work with Scandinavian players, right? I mean, people are scared. They're scared they're going to put their money in and it's going to just disappear, right? So the more we can, and it's not true, right? I mean, it's true everywhere. No, that's true everywhere. It's just perceived to be much bigger risk. So the more we can make sure that whatever we've got in place contractually, governance-wise, etc., of what we can control is sound enough, I think the more capital, local capital will flow and international capital will.
And just to be clear, political risk insurance and contract frustration insurance are our biggest lines of business.
Oh.
But
we see the most
my
demand.
experience as a project financier is that project preparation is everything.
Yeah.
So I think a couple countries have had very successful programs around, for instance, IPP, small hydro, Get Fit in Uganda, right? Came well-developed package, standard PPA, implementation agreement, government support from both the government of Uganda and KfW. On that basis, all stakeholders were invited to look at that documentation beforehand. And when the tender happened, there were a lot of people as developers, debt financier, all lined up to finance that. And you saw that that program worked. And I think about 10 to 15 of those smaller hydro projects have been worked out. You can see it with scaling solar, you see it happening elsewhere. So I think that would really help if you have standardization of these projects. And I think if you run it through a tender process as well, I think governments really benefit from that. I think, gentlemen, you have
Okay,
back.
yeah. This is for several project developers. I'm happy you already play in the Nigeria infrastructure space because Nigeria requires about $100 billion investment in infrastructure for the next 30 years. So my question is, what kind of support and collaboration can you bring to the table? Work with my office, for instance. By the way, my name is Osal Zubaro. I work with BP. That's my Director General. What kind of support and collaboration can you bring to the table for us to achieve that, that goal of investing, attracting $100 billion investment for the next 30 years in Nigeria's infrastructure project? Thank you.
So I didn't fully get the question.
I'm not sure if I fully understood. I think what you're saying is it requires a huge amount of investment. Was it Nigeria you were talking about, right? Okay, and what kind of support is being brought to the table to ensure? Right. So I don't know why I'm answering, but maybe because I'm working in Nigeria. So let me just tell you how I work. So, I work with Amy Jadasimi. I met her because she was a commissioner on the Sustainable Development Commission, which I helped co-lead with Paul Polman. She has this great vision about how important it is for Nigeria to transition its economy to be less dependent only on oil. And so basically, I've worked with Amy. She has very kindly paid a small retainer, and all of my fees are based on whether she actually is able to raise funds into a fully funded plan. I have a small team that works basically as an outsourced project development team for her. Okay, so that I'm doing the same with, you must know FarmFort. So and I think it's that level, quite frankly, of simplicity. Of like, I've got a bunch of people who know how to do this, let me come and work with you in a way that's not very expensive, that is going to help create that. Because part of the issue that we've got is that even, right, I mean, I know Ethiopia well, right? If you go to Addis Ababa, right, it's wonderful, wonderful city. The only people you ever meet are from development agencies, right? I mean, it's full. Any of the entrepreneurs I meet for the Shell Foundation can't live in Addis anymore because the property values are too expensive. And the people that are working there on these project facilitation are not necessarily the people who are going to sit and help you figure out how you fill in your form. They're far more conceptual. So I think the simplicity of the kind of assistance, which is, I suppose you'd call it technical assistance, but it's an outsourced project development team that a lot of people need. I think that's one of the gaps.
And if I could just, on the risk mitigation side, if you think about it, we will risk mitigate on our own balance sheet, but we've already been given the balance sheets of Peak Re, GIC of India, and Atrium, and there's others who also want to give us their balance sheets to risk. And if we can pool enough of the risk mitigation, it can also be from DFIs together, then we can provide the sort of risk mitigation that people need to invest, not just in Nigeria, but across the continent.
All right.
Yeah.
I think our time is up. Thank you very much for joining me on this panel today. If you have further questions, I think everybody will be available down there to answer any further questions. thank you very much for your attendance and have a wonderful rest of your day.
Thank you, everyone.